Hey everyone, I thought I'd do a quick call on the recent trade that I've just done not so long ago, maybe 10-15 minutes ago. And I thought I'll take you through my thought process of why did I do this trade. First of all, the market is I've chosen is the /6E market, which is the euro currency market. The market is about to close in 5 minutes, but I'd like to take you through it right now. First check was where's the volatility here? Okay, volatility has jumped up quite a bit. Now I'm looking at the toss charts here. It's not very accurate, the implied vol, but it is a good measure to look at. It's not really that far off. I don't have anything to compare it with right now, but here's what it is. The if I have to draw a line, an average line for the whole year, it has been around 7.3%. Currently it's about 8.5, 8.6, so it has jumped up a little bit. So here's the thing. The market has been in the free fall. So you look at it from here. So from 1.249, it has dropped to like 1.04, almost parity, and they call it one for one. It only needs to drop by like another 4 or 3 points to get to one for one, right? Anyway, this is the euro currency market. Going into the trade tab, here I've chosen the 21 delta strike because usually I would do a 17 delta, but here it's a half point strike, so I don't select that because look at the open interest and volume in this. If I click it, yeah, look, the half strikes do not have much volume, much open interest, but the full strikes have. So I always normally choose the full strikes. My risk guide is to go 1 point widespread. So I've sold it at 1.02, bought it back at 1.01. How much did I collect? Let's look at the trade here. So the trade has given me about 85% probability of profit. And then if I go in here and then select my break even, I think it brings the chart back in line. So 85% probability of profit, that's what I look at. That's a good number to have. I like to see an 8 before anything. Max profit is around 175. And then I have paid about $300 to put this trade down. Now, when markets fall, there's a really good opportunity to sell vol. Now, we're selling volatility here, and we're selling it into the strength of the market, meaning the market has dropped quite a bit, and we are selling the put side. What we're expecting here is to either stay within our break even and either go up or stay within our break-even points. The break-even point is around 1.0189. I've collected 175. I will look to close this when I've collected about 40 to 50% of max profit. So about $70, $80, $90, $100 maybe, right? That's what the goal is. Now, things can go wrong. It has been going wrong for me in the ZB market, and I'll show you that trade as well. But here's the thing: when it goes wrong, if the market falls on us, we will go and sell the call side. About 25 delta at that point, whatever that strike is at that point. Right now, this trade is 49 days out. If the market falls on us, we will convert this into an iron condor. Now, and that's the trade as of now. When anything changes, the market changes, I will let you guys know. But here's the trade that I've put in. It's done. It's filled. I'm in it. The next trade I wanted to show you is the ZB trade, the 30-year bond trade. That's the only other trade I have in my account right now. It's a 30-year bond trade. Not going very well for me because I think I rushed into it a little bit. Now look at this. I started off with a short put spread around 115 strike. Right, this is the one that I sold. Anyway, look at the trade tab first for me. I still have 35 days, so therefore I haven't moved out into another cycle yet. Only if this number goes below 20, 15, 18, that's when I look to move the whole spread out. But right now I have two iron condos here. And the reason for that is I had two put spreads, which went wrong for me. I converted both of them into iron condors. Now, how did I do that? First of all, I started with a 115 strike put spread. This is how the trade looked at the time. Well, not at the time, right now. At the time, it had the same setup as the 6E trade that I just showed you. But the strike is slightly in the money for me. It has gone through my break-even point. But when it was around here, around 116-ish, it dropped from, I think I put the trade on when it was around 119, or 118. And when it dropped to like 117, 116, that's when I converted this into an iron condor. Now the iron condor was a 117, 18 delta call strike. Now the reason this chart is off a little bit is because I have two call spreads. You can see the number 2 here because the second call spread is also at the same strikes. So where did that second one come from? So when the first one went wrong, normally what I do is, because the market has fallen so much, I go out and take advantage of the free fall of the market. And I sold in the same cycle. I sold another put spread at 113 strike. That put spread is sitting here nicely, right? It has not given me any issues yet. Sorry, it did yesterday, and that's why I had to convert this into an iron condor as well. But this one still has a 71% chance of being profitable for me, given where my strikes are. So max profit of 178 here. So this was the second spread at 113. So that's why you see here, what you see here is the short strike at 113 and then the short strike at 115. Now I'm expecting both of them to come within my range soon. If they don't, then I'll think about either closing one side, moving the other side, or rolling the whole spread out. That's how I trade, sell into the strength of the market. I have no issues selling put spreads all day long in this market. If I could afford it in my account, I would sell another put spread here because that's the strength of the market. Well, actually, I wouldn't do it in the ZB trade, in the ZB market. That's why I did it in the 6E market, because I believe the market velocity has been taken out. The fear that there was for the Fed call on Wednesday has now gone. The volatility hasn't come in quite a bit. So if you look at the VIX chart, look how it popped up and then it has come down a little bit today. So it popped up, then come down, and then I'm expecting it to stay around its moving average. And my moving average chart is around 32 days. That's only because I sell around 45 days, and within those 45 days, I get 32 trading days. So that's why I have it at 32 days. Maybe this chart, I need to adjust this chart a little bit around 40 days, just to get an idea here. But anyway, look at the VIX chart. It stays around its levels. It's pretty low. It has been low all year long. So I've been selling put spreads, call spreads, here and there, small risks here and there. I've been profitable all year in every market that I've traded, but this ZB market has gone against me, and today I've taken a euro currency trade. I hope you like this video. If you have any questions about anything that I've shown you today, just let me know. And again, want to show you some volatility here. So look, volatility spiked up, and then it has come down today in the VIX. This is volatility, implied volatility on the VIX options. But we're expecting for this volatility to drop even further, and when it does, you will see profits in your trades here, because we are short long. So that's why when it drops, it brings in some money for you. Hope you like it, and let me know if you have any questions. Thank you for watching. Bye bye.